VIX expiration tomorrow. What does that mean for the market? Are we going to be bullish or bearish afterward? We're going to take a look at everything in today's video. We're going to take a look at the SP 500, the NASDAQ, the Russell, the dollar, the bonds, the VIX, the yields, all that good stuff. All right, so without further ado, let's get started with the video. Okay, so tomorrow we have VIX expiration. And this is important because we get to see how the market responds the days after these contracts get expired. Okay, so this is just a nice simple Google search. We're going to put it on the chart and we're going to see what happens with the S&P 500 on these days and the days afterward. Okay, because as you can see, October 18th, which is tomorrow, we have a new expiration date. So we're going to look at all of these prior dates. All right, so we charted all those dates, and this is a chart of the US 500, which is basically the S&P 500. And what we're doing is we're looking at every time we got an expiration date, what happens the days afterward. Okay, so for January, you can see so the main point here is that it is very bearish. Usually when VIX expires, these are bearish days following. Okay, so over here in January, bearish the next day. In February, we're bearish the next day. March, we make a new low, we're leaning bearish the next day. Same concept for April. The next day is bearish. Over here, it's a bit interesting because over here we pop upwards, but then we pop to levels of resistance, prior levels of resistance that coincide with these highs, and it was a sell the rip event. So even if we did go up higher, we never were able to break above, and then all of this was a good opportunity to accumulate into shorts, and we ended up making another move lower. So regardless, still bearish. It doesn't automatically mean a huge rip to the upside. Same concept in June. We made new lows. It did make, a green candle technically, but then it ended up falling lower. And then in July, red day obviously as well. And August, red day as well. September, red day as well. And now we are here in October. This is going to be fun. Okay, so now that we've looked at VIX expiration, right? We have to look at other things in the market to see if there will be bearish indications of what is yet to come. But before we look at that, over the weekend when I wasn't able to make a video, when the VIX had a big 18% day, right? We took calls because the VIX has an inverse relationship to the market. We took calls, and this is how the chart ended up, started out looking. This is what it ended up looking like after we got the calls, and a nice quick 60% move over the weekend. So just want to first throw that out there. Also, guys, just a quick little honorary mention here with gold. We went long on gold. November 17th calls. Took profit on them over here at 50%. They were at 50% over here on this green candle. They're up over 200% now. So yeah, we absolutely rocked this gold call as well. So yeah, I just want to add those two. Now let's go ahead and take a look at the rest of the market, and we need to look for bearish things going on. Okay, first and foremost, let's go ahead and take a look at the yields. All right, so the yields are very important to look at because they have an inverse relationship to the market. If the yields rise, then that is generally very bearish for the overall market. And what I want you guys to look at here is the MACD indicator on the 10-year yield. When the MACD indicator is about to cross above, that is generally very, very bullish for this, which would be bullish for the yields. And in turn, it would be bearish for the overall market. So the 10-year yield is showing some bullishness in terms of the MACD. Also, clearly a big green candle. We could have, some sort of a pullback tomorrow, but overall, this is a very, very strong move. We could get a pullback and continue up. Okay, so keep that in mind. On the 10-year yield, let's quickly take a look at the shorter term yields. Take a look at the 5-year yield. It's already showing a lot of strength, and we did cross above on the MACD. So when we do cross above, on the MACD 1 to 2 days after crossing above tends to be neutral or bullish the next 2 days afterward. Okay, so we just crossed above today. Tomorrow should also be either flat or bullish on the 5-year yield. Let's look at the 20 and the 30-year yields as well. So the 20-year yield, similar to the 10, guys, we're about to cross above. Bullish move here. Okay, and then the 30-year MACD, similar, has some room to go to the upside, has more room to go to the upside in terms of the Bollinger Band as well, and on the MACD. Okay, so clearly the yields look like they want to skyrocket and they want to go higher. With the yields showing this strength, that is bearish for the market. Okay, very simple. Now let's take a look at the dollar. In my opinion, guys, the dollar looks very, very bullish. And let's just start off by saying that the dollar has an inverse relationship to the market. If the dollar is strong, then the overall market is weak. Okay, so this is the reason why I'm saying that the dollar is strong. Number one, let's quickly, we could just take a fib retracement from the recent lows to this most recent high. Okay, that's what I first want to do. You can see that the dollar is holding this 50% fib. Okay, number one, it's getting a pullback, had a big green move. We're getting a pullback and we're holding the 50% fib. That is generally good for bulls on the dollar. Okay, number two, this is a falling wedge pattern on the dollar. Falling wedges are extremely bullish patterns. So we're getting a very bullish pattern at a level of support. And so those are two main bullish reasons on the dollar. The third is that we are one green move away from this MACD indicator crossing above. So we are right on the precipice. We're very, very close to the dollar crossing above on the MACD. Okay, and once this downtrend basically breaks to the upside, the downtrend will then be acting as support and it'll give more room for another move higher. And as this happens on the dollar, it will be very, very bearish for the overall market. Okay, and last but not least, we have to take a look at the VIX. It's expired tomorrow, right? And what you need to look at, it's not giving as clearly definitive of a move like the yields or the dollar was giving, but it's in an uptrend. The MACD is about to cross above. And once again, the VIX is important to look at because it has an inverse relationship to the market. If the VIX is going to do well, then the overall market should be bearish. Okay, so with this MACD indicator crossing above like this, that should be bullish for the VIX. And if the VIX is bullish, then the market will be bearish. Okay, so far we've looked at the yields, the dollar, and the VIX. They're all showing signs of bullishness for these instruments. And if all of these instruments are showing bullishness, then that is bearish for the market. Now let's have some fun and let's look at the large tech stocks, which are the movers and the shakers of the market. Okay, so let's start off with Apple. So what I want to look at here is if these large tech stocks, as a majority, are showing either weakness or bearish or strength. Okay, so let's start off with Apple. Number one, Apple. The MACD indicator on Apple crossed lower. So if you get a bearish crossover on the MACD, that is supposed to be bearish for the stock. Okay, and clearly this is not a safe little opportunity to go long. It would be safer to get longs closer to these lows. We are holding this support at 176.60, but this is not really a bullish setup. This should continue falling lower. This is not really bullish on Apple. Nvidia, it doesn't help that the US is going to stop Nvidia from giving chips to China. So that caused Nvidia to take a dive. But interestingly enough, you could see that Nvidia is still holding this trend line, but by no means is it showing strength. Okay, AMD, obviously still showing some weakness as well. Google, not doing too bad, but it just crossed below on the MACD as well. It's bearish momentum on Google. Microsoft, failing to close above any of these highs, and we're about to cross below on the MACD. So it's not really, it doesn't look terrible, but this is not really a extremely bullish setup. On Microsoft specifically, the only way we get some sort of a push upwards is extreme buyers. So if tomorrow and the day after we get like just an exuberant amount of buyers and we push above these highs, I will be definitely bearish on all of these pops. So, but yeah, this is not a very amazing opportunity to go long, in my opinion. Tesla, it is giving a bit more of a bottoming formation feel, but the momentum is bearish. So we should continue on lower here, similar to what was going on with Apple. We are further lower on the MACD, according to the MACD on the daily, right, on Tesla. But it's tough. You can't really just go long off of this. You know, the overall momentum of everything is bearish, and, you know, people are going to be going short along this high here or this low here on this candle. So it's not safe really to be long unless you got some fills closer to these lows. But yeah, so there's that for the large tech stocks. Amazon also is not looking that bad, but, you know, Amazon is getting some love because of the strength out of the IWM and the consumers. But yeah, overall, guys, large tech stocks are not leading. That's what I'm basically trying to get at. The large tech stocks that were leading the market are currently, they're not leading. So if Nvidia, Apple, etc. were trading up here, that were showing strength, be a completely different story. But these large tech stocks are showing a lot of weakness. They're breaking below levels of support, and they're not being able to break above levels of resistance. So there's bearish momentum, not looking great for the tech stocks. Now, let's go ahead and make the final analysis. Let's take a look at the indices. All right, so let's start off with the NASDAQ, and this is a common theme. The MACD on the NASDAQ is about to cross lower. And once again, it's not bullish when the MACD is about to cross lower, right? The other thing is that this candle formation is not bullish at all. We should be making lows. This is not a bullish setup at all. This is really like anything close to these highs are good shorting opportunities, in my opinion. Like, this is not a very good candle formation. This is just ugly, okay? But when you look at the IWM, it looks a little better, right? But the IWM is not going to carry the market the way that the NASDAQ does. So if the NASDAQ is showing weakness, unless the IWM, unless like a miracle happens with monetary policy or the Fed intervenes, the IWM is not going to carry the market. But pragmatically, you know, it is showing some strength. It is getting some love, but by no means, just because, you know, just because the IWM is showing some sort of bullishness, it doesn't automatically mean that we have to automatically be bullish now. And the other thing is the IWM, this very, very important zone between 175.70 and 176.50. We wicked. We couldn't close above it. So if the IWM gave a solid green candle above these, then that's a different story. But, you know, we showed some strength into a level of resistance. Not the time to start going long, in my opinion, on the IWM. And let's go ahead and take a look at the SPY. Similar situation here on the SPY. This is just similar to Microsoft. We're failing to break above this major 437.70 level. We keep wicking at it. This was a very important level of resistance. We showed it in like a different video. But we keep wicking. We keep wicking. We keep wicking. We keep wicking. But now that options expiration is about to start, with the NASDAQ MACD also about to cross lower, with the large tech stocks also not showing that much strength, and actually just showing more weakness, this is really tough to be very, very bullish over here. The only thing that would possibly even cause the market to skyrocket is just extreme buyers, and the likelihood of that happening is slim. There's an 8 out of 9 chance that we should be bear. So tomorrow, options expire tomorrow, right? the day after tomorrow, 8 out of 9 times we should be leaning bearish. And regardless of whether, so tomorrow, you know, we could do well. That's completely fine. That's irrelevant, right? We could take a look at the SP500 again. We could just take a look at what happened on every single day, right? That we did expire. So we were red, we were green, red, green, red, green. So it's not a guarantee that tomorrow is going to be a bearish, but what I'm leaning towards is the day after tomorrow, or basically tomorrow, the day after tomorrow, and heading into the end of the week. I'm leaning bearish. And if we make new highs, then, you know, we just have to get some 2-week out puts, be safe, and expect some sort. As long as, you know, if we get a what's gonna be interesting is if we make. Let me clean this up. So similar to what we saw in May, right? On the according to the right here on the VIX expiration, similar to what we see in May, right? We ripped the day after. This is the 1 out of 9 where we ripped to the upside. We didn't fall the next day. We ripped. So in case that does happen for us, heading into the day after tomorrow, what I want to see is having some trouble at levels of resistance. So I want us to basically have some trouble at 440. If we do break up above higher, whatever, I want to see us at levels of resistance, so it'll help me be a bit more bearish. And that was basically the case back in May. And the other thing here that is bearish on the SPY is not only this wick, we made new highs and we wicked, right? The Bollinger Band, the upper level of the Bollinger Band is pointed lower. So each and every day, it's going to get lower and lower and lower, to a point where we will be algorithmically overextended if we do make a move higher. So as you know, if we are algorithmically overextended, if we're opening and closing outside of the Bollinger Bands to the upside, those become good shorting opportunities for a month, 2 months out comfortably. So lots of things are pointed at some bearishness over the next few days. And just going based off of history, going based off of the yields, the dollar, and the VIX showing bullishness, and going based off of the tech stocks not showing that much strength, it's tough to be bullish on the market over the next few days. All right, so yeah, you know, I hope you guys enjoyed this video. Please make sure to like, comment, subscribe, do all that good stuff, and yeah, love you guys. Take care.